So our next speakers are from the JADOCS team. Mr. Arun Sadagopan, he is the Regional Sales Director, Middle East and Africa for JADOCS. Prior to this, he was working for Oracle and has been in the enterprise performance management and business intelligence space over a decade, with his experience predominantly being in implementing and selling EPM. Along with him, we have CA Prakash Gopalakrishnan. He is a dynamic professional with career spanning over 10 years with JADOCS, Solico Group, Al Futtaim, PwC, Deloitte, and TCS. Prakash is a chartered accountant and certified in ERP and BI tools like SAP, Tableau, JADOCS, and many more. He is currently working as a senior solution advisory consultant with JADOCS AG, envisioning EPM capabilities for clients to scale up and achieve their finance transformation objectives. Please join me in welcoming Mr. Arun and Mr. Prakash.
Still energy left. The subject of tax is two things, right? So one is it's equally interesting, at the same time it's equally tiring. And we are the one who's actually stopping you from the lunch. So, oh, there is one more. I thought we are the last one. Ah, okay, perfect. Then I'm not the one. So I'm not the culprit. And I'll try to make my presentation much more entertaining and more at the same time informative. So, thank you. This is not my first time I'm here, and I'm always here now. Every weekend I'm part of ICAI, and I'm much more happy to be here again presenting. I'm just checking. Yeah. So that's me. I've become a little bit older now than the photo. Then Prakash, he seems to be the same guy, apparently.
Yeah, wearing the same suit also.
Just so that everyone is aware that we are the guys who are speaking on the photo. So quickly, what we are going to run through in the next 20, 30 minutes is that we're going to talk about transfer pricing. And I wanted to start off from the basic to still explain about what is transfer pricing, and then to run through some of the concepts and the definition that is involved in transfer pricing exercise. And at the same time, I'm going to even take you through to some of the live case studies or the use cases, how a transfer pricing works in the real world, and also to talk about some of the people who did not follow transfer pricing and got into trouble. So we're going to also talk about those people, and then we would say what is the impact in terms of UAE when these corporate taxes coming into play, and how much it's going to impact you. And also, I'm a technology guy. I've always been a technology guy, so we're going to talk about how a technology is going to basically help you in terms of managing all these kind of intercompany transactions that you're going to have. So with that, quickly, what is transfer pricing? So it's a basic, from the basic side, it's the transaction that you do, the price that you do for the intercompany transaction that you do. It can be from your headquarters to a subsidiary, or within subsidiary, or it can be from a subsidiary to the headquarters. So the pricing that you decide, that's the transfer pricing is all about. Now, in terms of the regulations, obviously that the transfer pricing was actually enabled. I'm sorry? Yeah. The transfer pricing was actually enabled so that people doesn't move or share their profit to the low tax countries, and to make sure that there is a fair transaction that is happening within the country that they are in. And who governs these things? So there is an organization called OECD, so which is the Organization for Economic Collaboration and Development, and they are the one who has given the principles, the guiding principles to how a transfer pricing should work. And at the same time, they have, and then they enforce the local Ministry of Finance people to make sure that all these things are followed in place. So from a key concepts perspective, the first thing is the arm's length principle that has been formed by the OECD. So which means that the price that you charge to the related companies or the parties that you have, which is with your subsidiaries or with your headquarters, that price should be equal to what you do with the non-related parties, how you sell it to other people outside. So that's the first principle that is there, especially it's called as the arm's length principle. And the second thing is BEPS, so which is basically the base erosion and the profit sharing that you have in place. So this methodology is actually started to make sure that when you're sharing your profit, it's not like you're sharing it to the places where there is going to be tax lenient or tax haven countries. So this is just to set that principle in place. So from an action plan perspective, OECD has clearly documented around 13 action plans, so which is available for you to go through it, and then that has to be followed in terms of making sure that you're completely compliant. And one of them is actually the CBCR, which is country by country reporting. If you're operating in multi-countries, then you have to make sure that those things are available when a tax audit is coming in place so that you submit it. And finally, it's the DEPE, so which is like development, enhancements, maintenance, protection, and exploitation. It's quite long. And so this is basically to make sure that all the intangible ones that you're having, it's been properly governed, and the sale and the profit has been properly shared. That is the main reason for it. Now, if you look at in real life terms, how it works is, if you consider that there is a company in US, which is where your headquarters is available, and then there are different subsidiaries that you might have, like one in UAE and one in India, for example, in this use case. And let's say that it's an example of the food products that you're selling, where India is the place where they do the packaging for it. It's just not only the packaging for what you manufacture from the USA, but also they are the supplier of these packaging to even the non-related parties, which is in the market as well. Now, when you are calculating the pricing, if UAE cannot have a price which is like, let's say that you're on an average, you're selling it at $20 in the market, UAE cannot sign an agreement for $10 with Indian entity. It's mainly because that's not a fair share. So it's basically that you need to sell it at the same price that you're actually selling it in the non-related parties as well. So that contributes. This is the calculation which comes in when the arm length practice has to be followed. Now, the second thing in terms of profit sharing and how DEMPE principle works is that, let's take the same example of USA and UAE, and Cayman Islands instead of India. And we talk about different tax percentage that these countries are having. So, for instance, that if you cannot make sure that all the intangibles, or have a dummy and legal entity in Cayman Islands and have all your intangible ones, like, for example, if you're doing the, let's say, the royalties and everything has been charged over to them, and which becomes a nil, so that's not allowed, and you have to follow the USA policy for 30% taxation has to be involved, because Cayman Island is a dummy entity. And similarly, for the profit sharing, you cannot make sure that, since UAE is obviously having a lesser tax rate, so you cannot share you cannot sell it at a lesser cost to UAE and make more profit out of it. So even at the taxing, it will be transferred back to the USA. Now, these are some of the penalties that we have seen in the market who did not follow the policy of the proper transfer pricing. If we look at Starbucks in 2011, so they did a business of around 400 million pounds, and what they did was they had a Cayman Island entity where everything went in and they didn't pay a single dollar in tax. So they obviously got into a fine because they did not have a proper policy in terms of their auditing. And similarly, Amazon, so they all deliver whatever we are ordering. They got delivered the tax notice, and with a fine of $1 billion because of not following the policy in terms of the transfer pricing. And similarly, Apple, we are still looking at their subsidiaries and how they are dodging it, and they are still searching for the taxes. And even Dolce and Gabbana, so when they sold the company during the merger and acquisition, similar to Cayman Islands, there is also Luxembourg is also tax haven. So they had a company, they initiated a company, made it into the holding company Gado, and then they sold off all of those things, which is incurring a fine of around 100 million pounds. And Google, they are still searching for the tax revenues which they need to pay, and which eventually they paid around $19 million. So what this tells us is that, first of all, two things. One is that you have to make sure that you have a proper tax policy in place, and it's been monitored, it's been completely under the control and following the policies of the local government, and at the same time with the OECD principles. And the other one is, from looking at this slide, I can see that they didn't hire people from you guys so that who can advise them in a better way. And incurring these losses, maybe you could have advised them in a much better way of not having these losses in place. So then if we're moving on to how it's going to impact in UAE.
All right, I'll take it from here. So let's look at the implications of transfer pricing in UAE. So it's not shocking to note that around 80% of companies in the UAE are either resellers, distributors, or they have their headquarters based out of the UAE, right? So and that's one of the reasons why they also went with a very lower tax rate, because it's a global hub. Most of the transactions, international transactions, are routed through UAE. So obviously, transfer pricing becomes a very important principle and the norm that we as accountants or as auditors or tax auditors have to follow. So let's just have a look at the implications. So we are looking at, the intercompany transactions will obviously have an impact from a taxable perspective. There's a concern in the UAE that these transactions may not be disclosed at fair value, right? And that's the reason we are getting into, we are bringing BEPS into the action. We are looking at all these cost sharing arrangements. So maybe IFRS speaks about cost sharing arrangements, but then you need to look at these contracts very diligently, and that's where you would refer to the BEPS action plan. Then obviously we have to adhere to the transfer pricing principles. And what is very important as a part of all these principles is determining the arm's length price, making sure all the relevant checklists from a transfer pricing perspective are duly filled. So you have to check whether the DEMPE rules are followed, whether the entity, the receiving entity or the paying entity is getting any mutual economic benefits they are deriving out of it, whether there are contracts in place. So we all need to look into this in a very detailed fashion. And obviously the 3-tier documentation, so local file, master file, and CBCR. So all these things needs to be in place. So now let's dwell into the technological aspect and the functional aspect. So obviously for any company, the challenges would be internal and external. External risks, because now the tax laws are changing, so you need to keep abreast of them. It can also, since it's going to impact your pricing arrangements with your vendors and customers, so it can also impact your competition, and you could face stiff competition in areas of getting better profitability. So these are the areas you need to in fact worry about. And from an internal perspective, you will have tax departments who are just now focusing on VAT, now has to focus on the profitability of the company from a transfer pricing and corporate taxation perspective. It can obviously impact your business performance. And one of the major issues I would see, operational as well as from a technological perspective, is ensuring that you're closing your books on time, right? Because now you have to be answerable to another person who would be your, which would be the taxation function in this case. So the questions we would ask is like, what kind of challenges or what kind of impact these challenges have on your company, or can we get the data at such detailed levels, right to the agreement level? Are we able to fetch those information, and do the companies have the visibility, and are they able to forecast and kind of do some kind of a scenario planning or project what their revenues could be under the new tax regime? So all these things we have to look at from a technological perspective. Now, I'm sure many of you professionals, some of whom are working in the taxation department, I'm sure you would be having this kind of a wish list. It could be even more. But then what we want from the ideal technology would be something like a centralized database. You want to discard these Excel sheets. You want to have workflows in place so that you can keep track of the activities. And mind you, obviously, transfer pricing, it involves a lot of collaboration. It's a team effort, not only within the taxation function, but also across the other operations. And then you need to have a proper version management for all your reports. You need to have flexibility to create reports from a statutory as well as management perspective. And in the end, obviously, you want to visualize and analyze this data, because now we are in the digital age. that's the next thing, right? So yeah, so mapping this wish list into a tool like ours, which is JEDOX, obviously, so as you can see that evolving tax landscape demands solutions which are kind of future-proof, right? And from that perspective, obviously, JEDOX can offer you all these capabilities, and we are just going to see shortly how it can be done. And global standards, yes, we do follow the IFRS and the new taxation principles that are being laid out. Apart from that, it's very integrated. We support different currencies. We have a strong database to manage all these integrations between different systems. And from a transfer pricing perspective, obviously, one of the key risks would be like if the companies are entering into a lot of mergers and acquisitions, transfer pricing is obviously a concern, but then they are also bringing a lot of systems and processes into their business. So how would you manage that? How would you integrate all these things? So probably let's have a look at how JEDOX can cover a demo around transfer pricing. Yep. Can I get a seat or something? Can I get the chair? Chair, yeah. All right. Let me just close this. Right. So as you can see, this is the home page. So JEDOX is a cloud system. So everything is stored in the database, which is stored in the cloud. So obviously, it has no impact on your IT resources. So you can have some kind of a home page like this, but obviously you can keep it as per your company profile. So we are going to look at 4 things: the key capabilities, what you can get from a ideal transfer pricing platform, but obviously it can be changed according to the needs of the business, right? So what we are going to look at is the collaborative functionalities, which is the workflow, right? We are going to look at some pricing analysis from an arm's length perspective. We can see how we can maintain documents and enter details regarding the different transactions. And in the end, we can have a look at the dashboard. But I'd rather start with the dashboard, so that would give you a better view of how we can look at we can do the analysis in the system. All right. So let me just maybe zoom out a bit. So I hope you can see the numbers clearly. So this is the transfer pricing dashboard. So I can see my data on a country by country basis. I can see in which countries I'm present. I can look at the revenues which I'm getting from these countries, and all the relevant KPIs. I can have a look at my head count, because head count is one of the information which we need to enter in the CBCR. But then I can also, instead of looking by KPIs, I can look at it by risk. So I can see which countries are non-compliant with the DEMPE regulations, or where am I having some kind of a tax-based erosion. So what we define by tax-based erosion is the country selling to the other ones with a lower tax rate. So you can see that in this case, Brazil, who's having a 34% tax, is actually taking advantage of these tax-based erosions, right? So we can see all these things in one window. We can also store benchmark prices. We can, so JEDOX having a strong integration tool, you can link the system to different providers for the prices, and you can get those data and compare them. This chart, one of my favorite chart from a transfer pricing perspective, I can see a distribution of my transactions. So the green represents the arm's length, the blue represents where there are benchmark variants, and the yellow represents the tax-based erosion. So let's say if I change this to JEDOX Brazil in this case, and you can see that the yellow has just gone up like how, right? So Brazil is really taking advantage of the lower tax rates in the other countries. You can see it period by period, so you want to look at it for a different year, you can do that, or you can even drill down to a month level. So let's say for the month of March, how my transactions are looking like. And don't you think this is a dream? Like, you want to do this analysis on a monthly basis, right? So I mean, this tool can really help you doing that, as long as we are able to integrate with your softwares and there's a better collaboration between different departments. apart from that, you can do some kind of analysis. So you can see your expenses, or you can look at your assets. And let's say from an intellectual property perspective, I can just click on it and I can see how much percentage of the transaction are tax erosions and how much are just having pure benchmark variances, right? So you can do that. You can drill down within the charts itself. And yeah, apart from that, you can see for the different entities. Let me just select something here. All right. Yeah, I mean, so you can look at some kind of the transactions with the transfer pricing risk and benchmarking. So you can look at some expenses and see where you have the differences in case of what was the transfer price, what was the benchmark price, and what was the amount that was traded. So this kind of figures and KPIs you can capture in the ideal transfer pricing dashboard. Right, so let's come back to the home screen and let's look at the workflow capabilities now. So obviously any activity would begin with setting up the due dates and the relevant completion activities. So we have something called as a workflow. So in the workflow, I can create a task like transfer pricing 2022. So this is a project which I'm starting. And what I can do over here is I can define responsibilities. So let me just click the start workflow button. 1 second. Yeah, okay. Lost connection to my mouse for a bit, but yeah. So the moment I start the workflow in Jedox, it will create emails and notifications. So I will probably be getting a mail in my Outlook folder for now, informing me that this activity has been started. And what I can do is I can probably have a list of activities, and I can keep it reported at an entity level, and I can track what is the status of my master file, my CBCR, and my local file reports. You can obviously drill down further into it. So it's not just these 3 documents which you have to prepare, but there would be even additional tasks and responsibilities. So these things you can maintain. And what the workflow capability offers you from a Jedox perspective is you can approve and reject certain activities. And these all would be tracked centrally, and you would be getting emails, right? So you can insert some kind of a comment that I have completed this activity and click on proceed, and then you can lock. Now this ideally we use in the budgeting and forecasting process, where a lot of team effort is involved, but we can also bring that into the transfer pricing landscape. It's just about charting out the ideal responsibilities and defining those activities and setting up approvals, rejections, those kind of stuff. Right, so now you can see that, for example, the E001 activity was assigned to the admin and analyst user, but some other company was assigned to a board user. So you can define user roles and governance within this tool itself, and you can obviously monitor the activities. All right, so if I come back to the home screen, we had a look at the workflow. Now I think it would make sense to have a look at the arm's length price. Now, obviously, taxation is very subjective. You enter into a non-arm's length price, so maybe you're selling it at a lesser value compared to your unrelated parties. But obviously, as long as you're able to substantiate these facts, so it's all about the substance, right? So as long as you're able to substantiate this, you can ideally win any dispute with the tribunals or with the taxation authorities. So what Jedox aims to provide you is with strong data and a very supportive data, so that anytime you have a hearing or you have to face the tax authorities, you are prepared. So this report is one such thing where you can select the legal entity. So Brazil is my favorite example because they are really exploiting their tax rates. And let's say the partner entity in this case is UAE, which has the lowest tax rate. And you can see this tax-based erosion is crazy, right? 33% of the total non-compliance is coming just from tax-based erosion. Benchmark price variance is not, I would say, a risk, because, okay, you may not be selling at those benchmark rates, but as long as it's in and around those numbers, it's fine. So anyways, our key focus is around the tax-based erosion. But coming back to this screen, so I can see what my legal entity is doing. So they are a real estate, and they are into the distributorship. And even my partner entity is in the same business. and there's a difference in the tax rate. Now, from the completed transactions, I can see for different categories, expense, assets, incomes, and loans, what was the transacted value over here, and what was the transaction price or the transfer price in this case. So they have dealt at these values, whereas with the external parties, for the same accounts or for the same nature of expenses or assets or incomes, they have dealt at these values. So you can see that they are charging so less in this case to the UAE entity. And you can look at it from an expense or asset level in this case for this report. So let's say if I select assets in this case, and I can select, for example, equipment, I can see that, okay, so I don't think we traded in equipment, so I'll select intellectual property or some other account in this case. Let's see. Or let's come back to expenses. So from a technical know-how, I can see that I entered a transaction of 100,000 at this price, whereas my unrelated price is at this value, right? So you can see these kind of information, right? And the ones in the green are indicating where you entered into transactions with a similar country or with an entity in the similar business as a real estate. So you can see that for the other UAE companies, you entered into transaction at $21. So I mean, these are some examples that you can see from here. And then we come to the last bit, which is the documentation. So we know about the 3-tier documentation. So you can maintain these kind of input steps in your in the system. So you can put a transfer pricing questionnaire, circulate to your tax auditors, and they can fill this for a combination of every legal and partner entity for every year. So the questions would be like, do you have the transfer pricing policy? What are the number of employees? Now, number of employees, obviously, we can just punch in from the system. So where you are seeing the data is already available in JDocs, it will just show as proposed. Yeah, so what is the holding distribution? And you can see all the other questions like, do you have the agreements? So the answer, you're saying yes, but then the proposal is no, because there are some transactions worth 57,000 which do not have contracts. So you get the gist of it, right? So from here, what you can do is you can get into the compliance screen, and for every transaction, you can just, as an auditor or as an accountant, you can just make sure whether for every invoice or for every contract, if it's fulfilling the tempe conditions or the contracts, or it's fulfilling the benefits, economic benefits. So, whether they have experienced the economic benefits or is just some kind of shifting your profits or expenses, right? So you can do the compliance check, and in the end, you can get a CBCR report looking something like this. You can have all this information captured at a country by country level, and you can see it for different years, right? So I think I would wrap up in this case. So this was a short presentation about how JDocs can help you for your transfer pricing arrangements. But in the end, I would say it's not just transfer pricing, but it's budgeting, forecasting, planning. I mean, anything under the sun which is encompassing a financial impact, which has a financial impact, will obviously be covered from JDocs. So anyways, thank you so much. Pleasure being here, and yeah, have a nice day.
Thank you, Arun and Prakash. Now may I request our past chairman, Neeraj Ritolia, and our committee member, Munish, and our member, Bikram, to come on stage and hand over the memento to Arun. So next, to hand over the memento to our next speaker, Prakash, may I request our past chairman, Suresh Panwa, and our committee member, Ankit, to come on stage